The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 7th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. You can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow traded off 19 points at 20,934. S&P is off 4 at 2371. NDX 100 down about 3 points at 5357. Composite off 3. Russell down 2. Gold is off 8. Silver's down 23 cents. Light sweet crude is up 7 pennies. Leading the charge here to the upside, it is Calvo Growers up $6 or 11%. Humana is up about 3% or about $5.70. Mettler Toledo International up $5. Applied Opto Electronics up $4. To the downside, you've got Thor Industries down $11 and change. That's 10%. AutoZone down about $11. That's 1 4/10%. Regeneron off $8. Chipotle down 7. Analog Corp down 7. Ulta Beauty is down $5. That's nearly 2% to the downside. You know, let's do this first before I go over the market, since they're flat, and then there's more meaning to them than just that. But yesterday, one of our listeners, Rick in Portland, sent an email request. I did not get it till after the show. Sometimes that's the way that it works with regard to the way these internet service providers work. But Rick, he is looking for some assistance and guidance with regard to Therapeutics MD. Is the ticker symbol. Now, Rick is in at about $5. TXMD is the ticker symbol out here. And here's what we know by taking a look at this. First, it's not a very, whoa, that's a problem. There we go. That's back. But that is a problem that I lost my screen like that. What does that mean? That would not be good during the show today. Let's hope that doesn't happen again. So here's what we know about TXMD. Steve-O, just give me a thumbs up to make sure that you guys got this in the den. I'm sure that you do. Here's what we know about this equity, Rick, and that is that it's really trading with inside a sideways range out here. Almost sounds like, some of the markets that we've been looking at here for periods of time. In this case, it's been trading in a sideways range since November of 2016. Now, the bottom of that, you're in at 5. The beauty here is that this consolidation, the bottom of that box is around 550. So it looks like you should be okay. I would not. Now, the nice thing is it's running from about 550 to 720. We're just called 550, 750, so it's a $2 move. So when price breaks out of this consolidation on either side, Rick, what you should anticipate is a $2 move, around a $2 move, equal to or greater than the consolidation pattern. Now, there's a brand new TAS Daily profile that formed here yesterday. Now, yesterday's candle is basically ugly. That is a bearish reversal candle. That's a bearish engulfing. You can call it an outside day as well. I don't think this is really extended, so we're not gonna get too hung up on it. But it does say that up near the top of the consolidation, 721. Yesterday's high, Rick, was 702. That's probably it for the move to the upside. If it does bounce, watch the 688 range. Now, what you really want to watch is 617. I don't know if you really want to watch it or not, but here's what we can say, is if price closes below 617, you'll see a run down to the bottom of the box. Is there any reason to unload this equity? No. Just know that this is in a sideways consolidation. And if it closes below 552, well, then you might want to just go ahead and protect those profits, because more likely than not, this will head towards that 439 area out here. Remember, you got about a $2 move, so it could actually even take out those lows as well. So, Rick, thanks for sending in that email request. And that was TXMD Therapeutics MD. Now let's go check out the markets out here, see what they're doing, see what we can figure out here. If we look at the daily equity futures contracts, we're not going to see a whole heck of a lot of problems. In fact, if anything, if we look at the week indice, right, that is as good a place as any to start. That is going to be your Russell and mine as we take a look at its daily equity futures contract. Just like when we looked at Therapeutics MD, we said price would pull back to the bottom of a certain profile. In this case here, the daily profile is where the Russell 2000 has pulled back to. This is the second day in a row it's tested and it's rejected that level. That says it still remains in, yes, bullish configuration. If you were to see a close below 1376.35, then price ought to take a ride on the reading, and that number is 1346.69. Otherwise, you ought to see a bounce to 1388. 1376.35 is the key number to watch. But the week indice has not broken down. Doesn't mean that it won't. But what we know as a 112, it's pulled back to a level of support. Now, that's the weak indice. What's the strong indice doing out here? Well, the strong indice is the Dow. Why do I say it's the Dow? When you take a look at this picture out here, you take a look at the ES Mini, the NQ, and the Dow. So it's the two upper panels and the one on the lower left. If you look at that just for a moment, I'll give you a moment. Why would I suggest to you that the strongest indice is the Dow? Got a clue? Yes, you do. And you are absolutely correct with regard to that. The reason is because when this new market profile formed on March the 3rd, where was price when this was forming? Exactly. Price was above this box. Is that usual or unusual? Exactly. It is unusual. You don't see it happen often. It does happen. Clearly, it happens out here. And when it does happen, what does it mean? It means that this move is strong, like bull. That ain't no bull out here. We have not even tested the top of the daily box at 20,865. So the weak indice has found support. Is it going to move off of that? I don't know just yet. But the strong indice, man, it hasn't even tested level 1 of support, and this is a strong meaning. Does not mean that it won't pull back to 20,865. But, folks, the message here is strong. It is bullish. Look, ideally, this thing will pull back, and maybe the max of this retracement that we get inside the market, maybe it's about 20,716, about 200 points. People will think that the sky is falling out there, but inside the Dow equity futures, they'll just be falling back to its first level of support out there, the bottom of that daily box. Now, there are problems in River City. So when we get back from this break, let's go take a look at River City. Let's go figure out what else is going on, because there are problems underneath the covers of this market, although it doesn't really seem to matter. Steve Rhodes from TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Now off 16, S&P down 3. So let's continue taking a look at some problems that the market needs to contend with. Problems, perhaps. Maybe it's an indication of a forthcoming bounce. If we take a look at the advanced decline oscillator readings for the three primary indices that we're able to track this with, we're looking at the New York Stock Exchange left-hand panel. Next to it, the NASDAQ Composite. Next to it, the Dow. Now, what we have here is we have all three below zero. You know the message there that says that sellers are in control. Doesn't mean that they're like wildly in control. It just means that they are the ones that are influencing the market out here. They certainly do that during the day. The very right-hand panel takes a look at the S&P 500, looks at the VIX on the bottom of that screen out there. We'll come back to that. What's important here, though, is the New York Stock Exchange. You and I took a look at this yesterday, and we noted that with the reading here inside of the New York Stock Exchange, now this is intraday, so it just really depends on how the day ends out here. We're at the minus 150 level. That is a yellow line on the bottom of my screen. Our actual reading right now as of 119 is minus 155.80. I don't know what it's going to be at the end of the day. But what I do know is that if it is minus 150 or lower, this is where the New York Stock Exchange typically finds bottoms. Does it have to be at exactly minus 150? No. In fact, this, sometimes it is, but most times it's not. But once you get down there, it in essence is communicating to us that the extent of the move lower inside the New York Stock Exchange has or is coming to an end out here. Last time we were down, by the way, at the minus 150 level, where we closed at minus 171 back on November the 1st. The actual bottom came in 3 days later on November 4th. Most of the damage had been done by that date. We've had very little damage done. The reading prior to that, where we saw a little bit of a bounce, was on October 13th. We saw a bounce for about 2, 4, 5, 6, 7 days before it then started moving lower. Got up to the zero line, couldn't handle it, got back below it. Sellers were in control. But this is an important area, an important, as I like to use, we'll borrow this from John Logan, an important inflection point. Now, maybe you use that as well, but it's not part of my normal arsenal out here. If you look at the September 13th reading inside of the advanced decline oscillator for the New York Stock Exchange, it was a minus 192.77 closing value on September 13th. What happened then? The market bounced. In fact, tried to get back up to its highs out here. You can come back to another time period, August the 2nd. What happened after that? Market found a bottom that day. That was the low that came in. The reading, minus 149.05. Again, you're at 156.65. This is not a message to ignore. Can it get worse? Yeah, but boy, oh boy, oh boy, oh boy, oh boy. Did I say, oh boy? This is, as Artie Johnson would say, I believe it's Artie Johnson, very interesting, although he says it a lot better than I do. Now, if we do go take a look at the VIX out here, what is it doing? It's doing its normal thing. It's trading below the 50-day. It's just saying to you and I, hey, boys and girls, ladies and gentlemen, gobs of liquidity exist inside the market. And until that changes, until the market has to sell off because there's no liquidity out here, and that number would be 1187. You need to see a close above that for possibly something to really take hold. This sideways-ish to lower on light volume move, slow roll, whatever it is you want to call it, may be taking place, is taking place. But we need to watch that NYSE. We can't trade it, but the signals that come from it are muy importante. Now, with regard to Goldilocks and silver out here, they're moving lower. In this case here, yesterday we took a look at the trend is your friend. It ain't no longer our friend when we look at silver here. That was cracked. That was broken. Looks like it will be broken by the end of the day out here. That says that silver, and I do mean high-ho silver, looks like it wants to target the $17.23 level. What is Goldilocks doing? Well, we know that broke its trend line 3 trading sessions ago. Yesterday was a test and a rejection. Right now it's just testing the swing point, and I believe it is with volume. That is the February 15th area. That is the area from February 13th. Let's go prove that by just looking at the GLD, right? So it was the 13th of February. It was the 15th of February. Let's go see what those volume matrices look like. So if we look at the GLD right now, it's done about 4.2 million shares. February 15th was 7 million shares. Now, I'm not the greatest mathematician in the world, but 6 million shares on, I'm sorry, let me get back to the proper date. February 15th, 7 million shares. Looks to me like we're doing similar or more volume. We're certainly not doing light volume. That much I know. So what does that mean? Hey, you're starting to crack a swing point with volume. If you take a look at the trading session on the 13th, it was 7.3 million shares. Well, you know what? Let me become a mathematician out here. What I mean by that is let me pop open my spreadsheet. Let me get down. Let me just make sure. I want to give you the facts. Just the facts, ma'am, as Joe Gannon would say. Would he not? Of course, where the Sam heck did I put that? I thought it was right there. What the heck happened? Let me see. Here we go. So volume right now, 4.3 million shares. We've been trading for what, 4 hours? 9:30, 10:30, 11:30, 12:30, 1:30. See, I have my abacus. Do you guys use your abacus? I use my abacus, my 2 hands, all of the time out there. So it says 7 million shares. So we're moving into those swing points with similar type volume. Not a good thing. You like to see the pullback on light volume. That is not what we have. What does that say? Just that alone says we're likely to see lower prices in gold and silver. Now, to confirm that, we go take a look at what's going on with regard to the Japanese yen. Well, if we take a look at the Japanese yen, it continues to reject the top of its box, 113.70. That says this may want to move higher. Doesn't say it's going to move lower, that's for sure. What do you need for gold and silver to find a bottom? What do you need for mining equities to find a bottom? You need it to start heading lower. You need it to start getting weaker, not stronger. Well, in this case out here, It looks like the yen wants to move up to 115.17. That would weaken it against the U.S. dollar. And if that happens, it's called curtains for the miners, curtains for the metals out here. So that is not looking good. Just keep your stops in place if you're in some trades out there, but it is not looking good. So what's the key? The key really is going to be watching one number. I like to use that Curly method. Was it Curly? I think it was Curly, wasn't it? Not Curly Sue, but Curly from that movie with Billy Crystal. And did he play? No, he didn't play Curly. Who was the actor that played Curly out there? Great actor. In any event, we like to keep it to just one thing. I'd like to give you at least one number for the day that you can write down on a pad of paper, and you can say, I heard it here at TFNN. And Steve-O says, if you were to see the NQ close below 53.48.75, and I do mean close below it. No, it wasn't Blazing Saddles, although that is a great movie. You got to like Alex Karras. That's if you are a Detroit Lions fan, which, I have been from time to time. And because, there's some great scenes inside that movie, of course. But 53.48.75. That's what's needed in order for this slow roll to start taking perhaps that first roller coaster ride down to the next low out here. We'll get back from this break. Let's go take a look at the NQ. Let's dive into it a little bit further. Steve Rhodes.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Hey, thanks to all you Denners out here. Les telling me it's City Slickers. Thank you very much. Jack Palance was the actor that we were looking for. Interesting. Have an email here. This just came in from AG in the Tigers Den. He says sends his wishes. He is just sent the email from 6,200 meters. That is what? How 6,200 meters is the equivalent to you? Come on, you guys are good at your meter thing. I got my abacus. I think it just multiply times 3 point something, right? So you're right around, I don't know, 20,000 feet, 21, somewhere right around there, right? So 6,200 meters. So keep the oxygen mask on out there. I believe he is somewhere in Nepal out there, right? So maybe he's trying to climb the Great One out there. But Alex, thanks for writing in and listening to the show via satellite. Yeah, I would say there's likely no internet up at the 6,200 meter mark out there. I do wonder just exactly 19,000. Thank you, Z. Wonder exactly how cold it is up there. Definitely cooler than where I'm at. Now, I had a request out here to take a look at platinum. And well, let's do it this way. Let's take a look at the current contract out here in platinum. Here's the daily contract. And so we talked about trend lines with regard to silver and gold, and we saw that those trend lines were broken. Silver is broken today. The same holds true with regard to platinum. Now, there was actually a close below the trend line yesterday, but just by a teeny weeny bit out here. Today, you've got some real follow-through to the downside. So where is it headed to? That's a great question. Again, I haven't run the charts, but likely influenced by the movement of the currency pair, the yen-US dollar out here. But here's what we do know, and I gave some values out here. This is the weekly chart for platinum, and it is right now back below the top of its weekly profile. Now, maybe this area is going to hold. It's not that far below it, but if there is a close below, looks like 964 is the price out here, then you're looking at a potential pullback in the 939, the 915 area. So this is not looking real good just yet. I haven't done the correlation with regard to platinum and the yen out here, but all metals at this stage of the game are headed lower. Now, before we went to that break, I mentioned let's go dive into the NQ a little bit further. And here is the 30-minute chart for the NQ. Now, this is showing basically major swings and the point move that we are seeing. So we can see that the moves to the downside, for the most part, are ranging from about 20 points to about 27 points on average. Now, there was one big move down here, this 48-point move, but for the most part, they're about 20-point moves to the downside. Now, to the upside, they are about 30-point moves, right? So if we take a look at this, the most recent 30-point move that we had was today, this morning, at about 10:30. So that move to the upside may be done out here. And you went from a 30-point move to a 26-point move to the downside. So the upside move was already taken care of in really kind of a one fell swoop out here. Again, a 30-minute chart out here. It was done post-haste. Now, the potential problem is that the low that we see inside of the NQ took place at 12 noon. You might say to me, well, Steve-O, I would say to me, Steve-O, what do you mean by that? Why is that potentially the problem? Well, the market has been doing this. Right? If we take a look at when the market is basically forming its lows out here, that's not it. Is this it? Yeah, it's all right around the noon time frame. Just going to make it easier. Just move with my swing point or my cursor out here. So 12 noon is when today's bottom came in. If we go take a look at the third out, wait, the 6th. We're at the 7th. If I go take a look at the 6th, look at when the bottom came in here. 10:30, really about 11 o'clock, so just a tad early, right? If we go back into the 5th out here, the 5th, the actual bottom, when did the bottom come in? It was a little bit early. It was actually kind of early, around 10:30 or 11 in the day. So a lot of these bottoms, we've seen basically overseas markets sell off this is the common pattern that we have seen. Overseas markets are selling the U.S. market in essence, and then we're seeing the U.S., the Americans, come back in and start buying. So sometime between 10:30 and noon out here. So we've made the normal 30-point move to the high. We've then made the normal 25, 26-point move to the downside. Now we might be making another 30-point move to the upside. What we do know, regardless of those swing points, is what we also have is we've got a consolidation. We talked about a consolidation, I think, at the opening of the show when we took a look at that one MD stock out here. So here is the beauty of this consolidation pattern. Now, I gave you a number to pay attention to. That was one number, right? That number was about, what was it? I don't even have it out here. But you wrote down that number. Okay, you say, geez, I just turned in. I didn't write down that number. 53.4875 is the number out here. So we know that we're going from right now about 53.45 to about 53.75. So there's your 30-point move. So any break of this consolidation in either direction ought to equate to a 30-point move. It will be the NQ that will then give you the signal that this so-called rounded top pattern is in place, and you ought to go ahead and see prices continue to move lower, although it may be gradual. We don't have that exact same pattern inside of the other equity futures contracts, right? If we take a look at the ES Mini, which is what we have out here. By the way, somebody might say, well, what are its swing values? Well, to the downside, they, for the most part, are about 7 to 10 point moves out there. We did see a 14-point move not too long ago, about 8-point moves to the upside, 8 to 9-point moves to the upside. But what we are seeing here in the ES Mini is we are seeing a series of lower highs, 30-minute chart, and lower lows. And that pattern is in place. That pattern will remain in place as long as the ES Mini doesn't get above 2378.50 out here. Again, we're seeing lower highs and lower lows. If we take a look at the Dow, yeah, that was a strong dog. So let's go take a look at the strong dog out here. And even in the strong dog, from a 30-minute chart, we're also starting to see a similar pattern with regard to lower highs and lower-ish lows. We have begun to see a bit of a consolidation. That consolidation pattern being a value of about, how many points is that? Probably about 70 points or so. So, that would be the expected move if we see a break in either direction of that consolidation box out there. So, in essence, that's really what is going on inside of the markets out here. So, I now leave it in your hands, your capable hands, to help direct me as to where it is you want to go. What do you want to look at? What is it that we can look at for you that's going to assist you with your decision-making, trading, and things of that sort out here? Well, we've got a request from the golf guy. You got to love how all this works out here. The golf guy says, hey, a few weeks ago, Tom mentioned the dollar was in a confirmed A to B equals CD down to approximately 97-ish. Can you see if it is still confirmed? Hey, if it's confirmed once, it's always confirmed out there. Do you think it is going there? That's a different question. Thanks. Great shows as always. Regards, the golf guy. So let's just not worry about what was said 3 weeks ago, because what you and I want to always do is use the current information, whatever that is, right? We have to be willing to make a change to our decision making as soon, because the market's role is really one purpose: reveal new information to us. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 26. S&P is down 5 right now. So for the golf guy, we want to go take a look at the U.S. dollar index. This question is U.S. dollar index in an A to B equals CD to the downside pattern out here? And the answer to that question is it could be, maybe, could also be an A to B equals CD to the upside. Yeah, I know that doesn't do you a whole lot of good. Well, let's go ahead and look at it further. And let me explain, Lucy. If we take a look at what's going on, we just look at our market profiles out here. In fact, let me go turn off the volume bars, right? We don't really want to. I'm not going to pay attention to those as we speak right now. If we take a look at, here's what we know with regard to lines of resistance. There is a line of resistance here at 102.02. You really want to watch that level out there, 102.02. And actually, if I did turn volumes back on, I haven't really used these on this, but the A to B equals CD up pattern would have a swing point at February 15th. Looks like about 43,000 contracts. I was taken out with 54,000 contracts. So I would say there's new information revealed to you, golf guy, and that would be that the U.S. dollar index is an A to B equals CD to the upside, a confirmed A to B equals CD to the upside. That would set up likely a Gartley sell pattern. Don't know if it will or it won't, but 102.96 looks to be the target. That is on your lightning bolt feature of your analysis out here. However, let's not get too hung up on that, because what we're really looking at is the next level of resistance for you, 102.02. If that level gets taken out, then the area that I gave you becomes a target, or the actual highs out here from the trading session of January 3rd. In fact, there won't be really a bearish message, an A to B equals CD to the downside. Price-wise, that would look like this. That would say that we're not going to get much higher inside the U.S. dollar index. The A point is that high out there from back in January. The B point is down here February 2nd. This cannot be ruled out, by the way, and your C point is just a few days ago, taking in 97.65 out here. It can't be ruled out, but what we do know right now, which is way different than several weeks ago, is this thing is in a bit of an uptrend running into resistance out here. So I hope that assist you. Let's never get too hung up into what our views were even yesterday, even 10 minutes ago, if the market, in fact, reveals new information to us. So I hope that helps you out. We have another request out here. This is from Peak D. Peak D asked the question about what was it? Peak, where is it? Where is it? It was Melancholy or something or other, right? Mercado Libre, maybe that's it. MELI is the number. And the question was, what was the question? I got to go back and find it. Steve, has Mercado Libre, MELI, hit a top, or is there any more left in its tanks? Well, let's go take a look at Mercado Libre. If there's any more top, or is there anything more left in its tanks out here, I'd want to go take a look at maybe a weekly chart out here. Is that all right with you, Peak D? Let's go take a look at it. Now, speaking of levels of resistance, this thing is way above levels of resistance. That really would have been the swing point from October the 10th. Big volume out there to the downside. Now, price never crossed that area with more volume. Does that mean that it doesn't complete an A to B equals C to the upside? Goodness, no. Goodness gracious, no. It doesn't mean that at all. Let me put this on a monthly chart. Where the Sam heck are we in the Mercado Libre? We're at all-time highs out here. Everybody looks to be having a good old time inside of Mercado Libre. So we know we're all-time highs. Is there anything that suggests we have a top in place? Like maybe a seventh wave pattern, like maybe a price relative strength divergent pattern out here? I don't know. Let's go check it out. So let's go take a look at this chart. Now, I'll show you a tool I haven't actually shared with you or even subscribers yet because I'm still honing it in, but it's turning out to be pretty fantastic tool out here. You are familiar with Stevie's red line. I'm not going to tell you what Stevie's green line is. It is not a moving average out there. It is another calculation that Stevie has generated out here. But with regard to that, it's neither here nor there. We take a look at his price moving higher, doing with less relative energy. And I have to say, I have to share with you that the answer is no. This is, because the last time that I was doing that and it made a bit of a top out here, Peak D was right here. Looks like, let me get my cursor out so you can take a look at what that day was. That was back here on the trading day of October the 10th out here. Goes ahead and bases and forms a bottom. Doesn't really begin to take off until we see that little hammer candle on December 21st. Remember, the meaning there is it's trying to hammer out a low. So let's go take a look at wave counts, if we will, which we will, from that low. And, son of a gun out here. It forms your seventh wave, your letter G out here just a few days ago. Is that what you were looking at there, Peak 4? Peak D is what he calls himself. Yeah, that's because Peak 7 or Peak G has been already taken. So, could be. But you know what you'd really need to see out here? And price is trading below Stevie's red line. That just says, hey, maybe a little bit of a pullback out here. You might say, how far of a pullback? We'll go take a look at another chart to answer that question for you. But actually, until that green line crosses down below the red line, nice little signal out here, by the way. And, hey, this is not going to call the ultimate top. But it's not going to be that far off from the ultimate top or the ultimate bottom out here. This thing does want to move higher. Maybe it's just simply a retracement out here. Now, with regard to Mercado Libre, let's go back to the daily chart out here. Let's go ahead and use those hidden profiles. They're not hidden from you, though. So we know we've got a seventh wave move out there. That was formed out here on the trading day of March the 1st. And this is a very bullish box. This profile that formed out here, says buyers are the ones in control. But until we actually see a close above it, 211.37 again, and really what you need to see is a close above March the 1st. Maybe it's just a sideways move. Support on this little guy, it is not so little as 195.40 on any kind of a significant pullback. So is that seventh wave move going to go ahead and identify the top out here? Well, let's go back to that same chart. Let me find this here. Let's just go change Mercado Libre. Let's see what pops up on the weekly time frame, right? You got to take a look at when you're flying, what's above you. And here we do see prices moving higher, doing less relative energy. However, there is no bearish reversal signal out here whatsoever. Let's take the counts all the way back from February 2016. Take a look at how that seventh wave there on a weekly basis did, in fact, go ahead and form that low or that high out here. Of course, you also had that bearish engulfing candle. Now, if we take a look at, hey, where are we in our counts to the upside? Only 3. With more to go is really what it says. So if you are long Mercado Libre, I don't see a reason to get out of it, and most certainly do not see a reason to get short this little puppy. So, Pete D, I hope that helps answer your question, at least what it is that I'm looking at out here. Now, as I go ahead and take a look at the email list out here, see if there's any others that have come through, the answer is no, unless I've overlooked something. If I have overlooked something, my apology. So let's go see what else do we want to take a look at out here during this next 30 seconds. What do we want to look at? Did I miss something inside the den out here? Yeah, I don't know that I have. But so let's go take a look at some individual stocks, right? Let's go take a look at HUM, Humana. Now, this is having one heck of a day out here. This is a daily chart that we're looking at. That is a nice-looking bar, 1 million shares behind the move, taking out a previous swing point that had 1.2 million shares out there. So you know what that says. Humana is now looks to be confirming a rather large lightning bolt pattern to the upside. That's going to give you a price projection on the next move inside of Humana of a price point of about $239.02. Steve Rhodes, TFNN.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 31, S&P down 5 right now. And the question that we're fielding from our Tigers Den out here is if we would go take a look at the GDX. The question is, will the GDX go ahead and fill its gap out here? In other words, the question is, will it come back to one of its breakout levels? Because that's really what a gap is. A gap is nothing more than, in essence, typically a wide-ranging bar and a breakout. That's a gap to the upside. Gap to the downside could be a wide-ranging bar and resistance, in essence, that it creates, right? So you come back to resistance and you watch volume. So the volume here on the gap is 140 million shares. That's the trading day of December 29th. December 29th, really holiday-ish type trading. So that's really good volume inside of the GDX. You're coming back with light volume, 26. So the answer is, and you're trading inside the December 29th, there's no reason as we speak right now, Danny in Atlanta, to suggest otherwise, to suggest that price is not going to at least come back to the 2032 to the 2045 area. Will price stop there? Now, does it have to get there? Danny, we want to watch the level of 2071 as well. That happens to be its TAS weekly profile. We'll be in a conundrum out there, and I'm not talking about the kind where you screw the top and you pour that white wine, that conundrum. You know which one I'm referring to for those of you that are conundrum drinkers out there, not I. Well, if it's white, it has to be sake. And in this case here, the conundrum would be a close below that 2071, which would be filling that gap out here. The bigger gap, the more important gap for us to be keeping our eye on is that island bottom mon. If we take a look at that island bottom pattern out here, let's go ahead and get rid of our TAS boxes. That is this one. This is the one that's really going to communicate to us whether this was really a bullish move or just simply a head fake out there, the old Michael Jordan head fake. That is a beautiful bottoming pattern out here. Very strong. The pullback, yesterday I think we looked at it at about the 0.618 retracement level, was off by a penny or so. We're probably there today. We're just down now by a penny or two, so no big deal. So we're kind of at a natural level out here. We've looked at a couple of my indicators that suggest that price ought to stall, right? If I pull over the XAU as an example, remember, ought to stall, and we ought to see Stevie's red line, currently at 85.67, and price eventually converge. What I don't know is whether or not my oscillator and change line is just going to keep moving down in order to test price. The more bullish thing is you see a bounce into that area and then overtake that area. The bearish thing is you bounce in that area, you see these two come together, they do a little kiss and tell, and the tell is get the heck out of my face, so to speak. In other words, a move to the downside. And is that a possibility? Is it possible that the move that we saw inside of the GDX was nothing more than a counter trend move? Is it possible? Have you entertained that thought out there? I can tell you that I am entertaining that thought. And why shouldn't we entertain that thought out there? Because that, in fact, really may be the meaning. What do you say, Willis, out here? Take a look at the weekly chart here for the GDX. You know, when it formed its bottom, one of your favorite bottoms and mine is it did a little price relative strength divergent pattern, created that little hammer back on the weekly chart here from January 22nd, 2016. When it formed its high out here, the same pattern, only in reverse. Little shooting star out here the week of August the 7th. That marked the high. The prior one marked the low. And now, if it does take out that island bottom pattern, and it is potential, take a look at Stevie's green and red lines here. They're not in a bullish configuration. And quite frankly, hey, look, if that island bottom gets taken out, let me tell you, this is why you want to make sure you have stops in here. You'll see the GDX head all the way back to that hammer from back in 2016. That's $12.65, give or take a few shekels out there. So just keep your stops in place. The next stop for the GDX, as Danny pointed out, is likely that gap around 20.45. Folks, stay tuned. Your favorite polar bear and mine, David White, will be up next. I'll be back with you at 3 o'clock. If I don't see you then, we'll see you tomorrow. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.